You need to think about your strategy, your process. How am I going to approach investing? How am I going to approach this cash flow game? How am I going to get an abundance of cash flow in my life that covers all my living expenses? Today I want to discuss dividend reinvestment plans, or DRIPs for short, also known as DSPs, direct stock purchase plans. This is PPC Ian, and if you've been following my videos on YouTube, I am a dividend investor. I am investing in stocks that pay dividends with the eventual goal of having enough passive income from dividends to cover my personal living expenses. And in fact, I recently did a video that discussed many ways, multiple ways in which dividend investors can go out and purchase stock. And in fact, dividend reinvestment programs were one of the options that I discussed. So I don't want to cover that ground again today, but what I really want to do is jump into why I think these dividend reinvestment plans are oftentimes overlooked. I think they are considered old school, old technology, but they still have many advantages. These days, the media loves to cover new disruptive technologies, especially in the personal finance space, the financial technology space. But again, just because there are all these new technologies, sometimes in the world of investing, it makes sense to pay attention to the old school, to the historical ways of doing things that actually are tried and true and have many benefits that are oftentimes overlooked. So dividend reinvestment plans, they allow one to buy stock directly from a company, typically through a transfer agent that the company appoints. You own the stock in your own name, not in someone else's name, not in the street name, as it often is when you buy through a broker. And they also have many other advantages. So I want to share some of those today. First and foremost, there are very low barriers to entry. If someone out there wants to get started with investing, most important thing is to get started sooner than later. In fact, time trumps everything in the world of investing. So the more time you have, the better. The best time to start is oftentimes now. And time actually, the compounded value of time actually has more benefits even than money itself, than putting in a huge lump sum of money at the beginning. And because of that, what's great about dividend reinvestment plans is they encourage investors to get started now. And the way they do that is oftentimes the minimum investment is very low. Some of these plans allow you to invest as little as $25, sometimes even I've seen $10 per month. So if you're a really small-time investor, you're just getting started, maybe you're very early in your career, maybe you don't even have a job yet, maybe you're still in high school or college, you may want to look at dividend reinvestment plans because, again, the money doesn't matter. Don't worry if you don't have a ton of money to put in right away. The benefit of the dividend reinvestment plan is you can start really small and you can let that time work for you. You can really take advantage of the time. And I think anyone who's a dividend investor, myself included, we all wish we got started even earlier than we did. And I'm not trying to make people feel bad also if maybe you've waited a long time or you feel concerned, is it too late to start? It's never too late to start, but again, the best time to start is sooner than later. So why not take advantage of the very vehicle that allows someone to start early? Start with small amounts, get their feet wet, test the waters. So I think that's really, really cool. And here's the thing, why can you start with such a low amount of money in dividend reinvestment plans? Well, many of them do not have commissions, especially on monthly recurring investments. We'll get more to that later, but you're not paying commissions. You're going direct. The company wants you to buy their stock because you're going to be a loyal shareholder. You're going to own it for the long term, and it's going to provide a base. It's going to be good for them. So they encourage this kind of thing, and therefore it allows those of us who have a lot of time maybe before we need the money to just get started and get started with a smaller amount. So I think that's point number one. I think point number two is just the process of a dividend reinvestment plan. I think with many things in life, process is important. You can't just jump into something. You can't just have a kind of one and done solution. You need to think about your strategy, your process. How am I going to approach investing? How am I going to approach this cash flow game? How am I going to get an abundance of cash flow in my life that covers all my living expenses? Well, I know if I just take action and do something today, set it and forget it, that's not enough. It needs to become part of my lifestyle. It needs to become part of me, the process, my strategy. And what I really like about these plans is the way they're architected. You almost have to in some ways take advantage of the process. And really, what am I talking about here? Two things: reinvestment of dividends and also automatic investing, monthly recurring investments, dollar cost averaging. So let's talk about both of those. Reinvesting dividends is really important. It may not sound like, in the short run, if you're getting 3% dividend, it's not a huge dividend check, might not seem like much, but there have actually been models run. I don't have them in front of me today, but when you reinvest dividends versus don't reinvest dividends, the differences over the long term in terms of the amount of money that is accumulated is substantial. So, as the name implies, dividend reinvestment plan. These plans are set up by companies through transfer agents to allow you and me to reinvest our dividends. We receive a dividend check from the company. Rather than cashing it and spending it, you use it, oftentimes with no commission, to buy more shares in the company. And you might be thinking, my dividend check is only $10. The company's share price is $100. I can only buy 1/10 of a share. Is that even possible? Absolutely, it's possible. With a dividend reinvestment plan, you can buy fractional shares. And that's a fundamental point that I think is really wonderful about these plans. But again, process is important. It's a dividend reinvestment plan. One of the most important processes that a dividend growth investor can adopt is reinvesting dividends. Why is that? Your results at the end of the day are going to be better. You're going to have more money when you need it. Now, don't get me wrong, you're not always going to reinvest dividends. At one point, you're going to want to live off of the dividends. That's certainly my goal. And at that point, you don't have to reinvest anymore. You can change your settings in your DRIP account and you can start receiving your dividends as a check. But you don't need to do that in the short run. In the short run, maybe the first 10, 20, 30 years of your investing career, when you're building that nest egg, you're building that portfolio, you want those dividends to reinvest. You want the right process, the right strategy, and DRIPs make that strategy really easy. So that's the first part of process. The second part of process is dollar cost averaging. So what is dollar cost averaging? It basically means that you don't just invest money, set it, and forget it. Investing becomes part of your lifestyle. You choose to invest money on a recurring basis. And so what does that mean? Well, with a DRIP, you can opt into investing increments of money, again, as low as $25, even $10 in some cases on a monthly basis. You can have it auto-debit your bank account, buy the stock, even fractional shares every month. Now, why is this important? Most of us, myself included, are very bad at timing the market. You have all this money at once and you just put it in the market. What if you're buying at the peak? You might be. The beauty of dollar cost averaging is it's the right process, it's the right strategy. It's a strategy that oftentimes will minimize your weighted average cost of shares. You're going to be buying at the high points, the low points, the middle points. It all averages out, and it really forces investors to be disciplined, to make it part of their lifestyle, to have that process by investing month in, month out, same amount every time. So I really like DRIPs for this reason, is that they really enforce that wonderful process. So another point, and this is really tied to the last point, is the point of automation. How many of us out there get a paycheck and it seems like the money flows out really quickly? There's a lot of things that one can spend their money on these days. We're bombarded with advertisements, bombarded with just wonderful things that we can all buy. I like to subscribe to the model of paying myself first. What this means is as soon as the money comes in, it goes into those investments before I buy other stuff, before I buy, new shoes, clothes, go out to dinner, those types of things. I want to pay myself first. The beauty of a drip, again, this ties into the automation, into the process, but it's worth pointing separately that it allows you to pay yourself first. What it does, if you want it to, and you don't have to do this, by the way, you can just put your money in and let it compound without investing more each month. But if you want it to, you can have it automatically debit money from your bank account each month and dollar cost average in. So we just talked about dollar cost averaging, but the nuance to all of this is you're paying yourself first. If you just waited to the end of the month, the way I would say many people, myself included sometimes, is the money might not be there. It might have been already spent on something else. But if you pay yourself first, you always get that money into the stock. You have less money left to buy other stuff, but somehow it oftentimes works out. You're smarter with your finances. You're more cognizant of your finances when you pay yourself first. So drips encourage this behavior of paying yourself first, which I think is absolutely critical to becoming financially free, to having financial independence and an abundance of cash flow from dividend plans. One of the other things I like about dividend reinvestment plans, I would say the fourth thing, is they really underscore longevity. These plans, unlike a potential new disruptive technology, and don't get me wrong, I like disruptive technologies. I work in technology, they're great. But when it comes to finance, I need something that's going to be around for a long, long time, because I know my dividend portfolio most likely won't be covering my living expenses this year, next year, or even 10 years out. But you start looking 15, 20, 25, 30 years out, I'm gonna be reaching my goal. And I need the vehicle that really pushes me towards that long-term perspective. Because I would say as a dividend investor, one of the biggest challenges is the psychology of it all. Sometimes you get discouraged, the market goes down. Sometimes you just can't wait. It feels like it's taking forever. You need that discipline, you need that process, that strategy. And what's great about drips is, one, they make it a little bit difficult to sell. Not too difficult. I mean, they'll sell typically if you give them instruction to, but it's not like a brokerage account where you just log in and sell that instant. Typically you submit your order, it'll take some time, so on and so forth. So it's more of a long-term vehicle. And just the way it's set up with the dividend reinvestment, with the automatic payments each month, the dollar cost averaging, all of that promotes the long term. It reminds us, why did we start? Why are we in this? Even just to set up a plan, you need to set up a separate plan for each stock. This takes some time. After you put in that time, I think there's a psychological shift. Is this really something when times get tough that I'm going to sell? Or am I going to stick with it because I know when I set this up, I purposely was thinking about the long term. So it's hard to fully convey this point in words, but really where I'm coming from is these plans, psychologically, when you go through the process of setting them up, you go through the process of living them, you go through the process of making them part of your strategy, you're not just going to sell. They're not something like in a brokerage account where you feel like you can trade, or you feel like, I want to trade in and out of stock. No, this is for the long term, and psychologically it's going to remind you of that every single day, which again, if you really want to live off of dividend income, you need to make it part of that lifestyle. It needs to be ingrained. You need to remind yourself of why you started. So one other reason that I like dividend reinvestment plans is sometimes they're cheaper. So commissions are coming down, especially with some of the disruptive technologies. There's brokers out there that actually offer no commission. And in fact, I covered some of these options in one of my prior videos that you may want to check out. It offers different ways to buy dividend stocks for a dividend growth investor. And there may not just be one right way. I'm talking about drips today because I think it's an overlooked topic in our industry. But there are other ways. Check them all out, and in your case, it may be a combination of the different strategies that works best. But one thing worth pointing out with drips is sometimes they're cheaper. If you're a smaller time investor, you're just getting started, you want to make those monthly recurring investments, maybe as low as $25, $50, $100, whatever it is. Many of the plans, you need to research them, but many of the plans offer no fees or very minimal fees, and that's wonderful for someone just getting started, because I've been reading lot of books, and one of the books I read recently was Tony Robbins. It was his book Money. This is the one before the new one that just came out. And what's really interesting in this book is it goes through in depth how much fees can hurt one's investment career. If you're investing and even just little fees like 1% at a time taken off the top by the broker or by the middleman, if you will, those fees can really hurt someone over the long term, especially when you compound them 30 years out. So what I like about drips is oftentimes they minimize the fees, and that's really, really wonderful. So before we close out today, just a few things to be aware of with drips. So I'm making them sound like this really amazing product, but one thing you should always be careful of is not all of them offer low fees. I've been seeing fees go up. So some of them now offer fees, and some of them the fees are actually sometimes higher than going with a discount broker or disruptive technology. So be very cognizant of that. Research the fees. It's very easy. When you look at the prospectus, you look at the plans, research the fees. I would say another challenge with dividend growth investing overall, but especially with drips, is the accounting. If you're buying monthly, you're reinvesting dividends quarterly, that's a lot of records, a lot of numbers to keep, especially when you're doing really small increments at a time, like $25 here and there. It's a lot of record keeping. But at the end of the day, if you're a dividend growth investor and you're in this for 20, 30 years to build a lifestyle out of this so that one day all you have to do is manage your portfolio, you don't have to work, you have the cash flow coming in, you should probably get used to that kind of record keeping. I think it's a good exercise, a good process to go through. We've been talking a lot about process today. I actually think the record keeping and the process of the record keeping yields insights for you and me, for the person investing. And I think it keeps us disciplined. It keeps us focused on the goal. So sometimes it may sound like I don't want to keep these records or it takes too much time, but that's the time that you invest to stick with your strategy for the long term. So this is PPC Ian, ppcian.com, discussing dividend reinvestment plans, a vehicle for dividend growth investors to purchase and invest in stock for the long term. Quick note, I am not a financial advisor. This isn't investment advice. This video is just for fun and entertainment. I have a huge passion for dividend growth investing, and I look forward to sharing that with you in the next video.